Hi guys, welcome back to Suero TV. I'm Dr. Akpata, your host with the most. Welcome back to Basic Accounting for Business Owners series. Last week we discussed bank statements. This week we are discussing tax. It is tax season right now in Botswana. The Botswana Unified Revenue Services, this is the tax man. Their year starts from July to 1st of July to 30th of June every year. It's June, so it will be 30th of June next week. It is the end of tax year. What that means is we need to be consolidating most of all the taxes we've been paying the whole year and actually submitting end of year returns to BURS. Alright, so I'm gonna just do the basics for you so that you understand, even when you're an accountant or when I come in and I say I need this, and you should also be in the loop and understand actually what I'm talking about. You should also understand, as the business owner, what taxes do you need to be paying for. All right. Now, just to touch on last week a bit, a point that I actually forgot to make on for just a brief one between the bank statements and the revenue that you receive. It will happen that, for instance, when you receive revenue on your bank statement, right? On your financial statements that I've produced to you, you've received 700,000 on your bank statements, as many you've received. On your financial statements, your revenue part on the income statements is you've received 1 million. Now, I would like to advise you, this is a mistake sometimes that a lot of business owners make and think the money that you've received in the bank, it will match the revenue that is actually on the income statement. Those are two different things. For instance, if you actually have invoiced a customer, right? And if you've invoiced a customer and this customer hasn't paid you yet and you haven't received the money yet on the bank account, we are still going to record it as your revenue. Let's say maybe, for instance, your financial statements are due end of December and you've invoiced a customer for December, and you're only going to receive the money in February or January next year. What will happen is we are still going to record that as revenue for December, although you still haven't been paid yet. Okay, so there is a difference. So do not compare the money that you've received in the bank versus the revenue that you will see on the income statements. Two different things. If it does happen that you've invoiced a customer and that customer has actually cancelled the order, or the customer is not going to pay because you've lost that customer, for whatever reason it is, you're going to need to issue what we call a debit order so that you can actually remove that revenue from the books. All right, so that now you know that this customer is not existent in not necessarily the customer, but the invoice is not existent because the order was cancelled, or the customer is not going to pay for some reason, whatever it is the reason, but it shouldn't have been invoiced again or in the first place. Okay, so that's what it is. That's what I'll touch on. Difference between money that you've received in the bank and money that you will see on your income statement. I wanted to clear that one out. All right, now let's talk about tax season now. All right, it's end of year for BURS. It means now, as a business owner, there are certain taxes that you are supposed to be tax returns that you're supposed to be submitting at the end of the year. But I'll just go back a little as what are the taxes that you should be expected to be doing as a business owner. I'll be doing this every week. This week I'll be focusing on pay as you earn in particular and income tax. Okay. The very first step as a business owner, when you register your business, when you go register Suero Consulting, the very first step that has to be done, you have to register your business TIN number, okay, with the BURS, and they will register your TIN number for you. This is basically to say, yes, I'm an existing business. And then that TIN number will also be used for your income tax. Okay, what is income tax? Income tax is just tax on the profits or losses that you've actually made. All right, so what is important, even if you've actually made your losses, what I need to just explain to you how it's going to work. This is why it's very important when you've registered your business and your business is properly running, whether you have made losses or profits, you still have to declare to BURS that I have actually made losses. How? This is when an accountant comes in, does your financials for the year, and those financials are going to be submitted to the BURS through the income tax form. The income tax form is actually just your financials. We fill it in as your financials that we would have done the whole year for you. All right, so this is why it's super important as a business owner, because these are technical things that require an accountant to do them for you. It's very important for you to have an accountant for you to run a successful business that will also comply to the tax man, so you don't get into trouble one time that you have registered a business you are running but you're not paying your taxes. Okay, so if you haven't done this, you have never submitted your income tax before, it's very critical that you reach out an accountant as soon as you can. We're able to help as well, so that you can actually just get up to par with your taxes. All right, so every single year, at end of your financial year that you would have actually selected, which will be helped, the financial year will be helped by you hiring an accountant. An accountant will actually tell you this will be your financial year. They will help you establish that. Okay, and most of the time the financial year will probably start when the time you started operating, when you started receiving money, you started invoicing and all that. That will probably around the time, but that is the technical stuff for the accountant. But the point that I'm trying to make is, after the accountant has actually done your financials, whether you've made a loss or not, they still need to do a return for you to declare that you've made a loss, or to declare you've made profit. Very technical for accountants, this one. Okay, but it needs to be done. All right, and then today as well, we're going to be focusing on the pay as you earn. Now, pay as you earn, when does it come in for your business to pay as you earn? Now, when you have employees, all right, and your employees are being paid 3,000 pula and above, those employees should be registered for tax. They are taxpayers. For the minute you start paying an employee 3,000 pula and above, those automatically become taxpayers, and they should be registered for tax. You can ask the employee to go register for tax so they can get a TIN number, and you as an employer, you have the responsibility to withhold a part of their income, what we call withholding tax on salaries, which is actually pay as you earn. Basically, it's the BURS has actually given this responsibility to employers to do it. You withhold it on behalf of the employee, and you pay it to BURS on behalf of the employee for as long as the employee is earning 3,000 pula and above. Okay, now how do you withhold? It depends. There is a tax table that you have to follow. When you actually find a tax table is there on the website of BURS, just go to BURS, you'll find a tax table there. It will show you what the ranges are. If you're earning 3,000, this is how much you should be withholding from the customer. So when you withhold from the customer, let's say you are paying them 3,000 pula, you're going to be withholding 100 pula from the employee, not the customer, from the employee, and the balance will be the one that goes to the employee. Okay, so what that means is that now you are going to be, as the employer, going to be paying BURS that 100 pula. How do you pay BURS? You can pay BURS through EFT, or you can pay them through e-services if you're registered for e-services. All right, so at the end of the year, now that you've been withholding this money every single month from the employees, at the end of the year as well, when you've actually withheld the money every single month, you need to also pay. When you've actually paid BURS, you also need to submit what you call a return to BURS of the pay-as-you-earn returns. To BURS, attaching that proof of payment that shows that you've actually withheld. So there's the payment, and then there is the return that you have to submit on behalf of for the company, on behalf of the employee, that I have withheld so much from employees, and this is how much I have paid, and this is how much I am submitting as a return. Now, this technical stuff, normally it's very confusing for employers. This is why you will need an accountant to come in and help you with these calculations. All right, HR is normally responsible with, if you have an HR department, it's normally responsible for ensuring that salaries are done and withheld, but most of the time they'll be helped by the accountant within the firm on the calculations, on ensuring that everything balances well. All right, super important. So after you've actually submitted the returns to BRS every single month, at the end of the year now, the tax year, this is end of this month, from the 1st of July, we need to be submitting what you call end of year withholding tax pay as you earn return. It's called the ITW10. All right, it's called the annual return pay as you earn, that we have to be now consolidating all the payments that we've been making, and we submit to BRS like, yes, this is how much we have paid, and we calculate for the whole year. Again, a little bit technical. It will also need an assistance of an accountant for us to help you with this. So this is exactly what you should be doing. So if you have employees that are earning 3,000 pula and above, you should be withholding this tax from them and paying it on their behalf. Remember, they are the ones who are supposed to be paying this tax. It's their tax that they're paying. BRS has just given the employer the authority to withhold on behalf of the employee. All right, now employees at the end of this tax year, they are entitled to what is called an ITW8. Okay, an ITW8 is basically a form also consolidating all the taxes that you have withheld from the employee, and then what you do, you actually give part of that ITW8 to the employee now to go and submit what? Their individual tax returns. Employees also have their individual, remember the employee is a taxpayer, they also need to declare that, yes, I have been earning 3,000 pula a month and my employer has been deducting it and I have been paying it and my employer has been paying it for me. Now this is the individual tax return that is normally due by the end of September. We all know about it, that everybody's always running around about. Is the duty of the employer to ensure that the employee has ITW8 form to show that you have deducted the tax and indeed the employee has paid that tax. Then the employee will then declare that they have paid the taxes, as well as any other payments they are making as well, or any other incomes they have besides the income that they're getting from you as an employer. So that'll be it for today. I've actually just covered income tax and we've covered pay as you earn today. I hope it's clear. I hope I wasn't too technical, but I just wanted to make sure that you understand, as an employer, it's your responsibility to ensure that your taxes are in order, both income tax, pay as you earn, and and for your employees as well. If you need help, this is what we're here for. Please contact any accountant that you know to help you. If you have one in-house, we are also here. Give us a shout if you need help with your books. All right, bye for now. Thank you so much for listening. Bye bye.